A lot of Airbnb hosts right now are exhausted. And honestly, I don't think enough people talk about that. Because when most people first get into short term rentals, they're focused on the income potential, the revenue screenshots, the occupancy numbers, the idea of passive income. But what a lot of investors discover later is that short term rentals can become incredibly operationally intense. And eventually, some people hit a point where they start asking themselves, do I actually want to keep running this business this way? That's why you're seeing more investors start exploring midterm rentals, not necessarily because Airbnb stopped working, but because they're reevaluating the balance between income, stability, and lifestyle. And honestly, I think that's a very important conversation because I've seen investors make great money with short term rentals. And I've also seen investors completely burn themselves out trying to self manage properties that were never aligned with the lifestyle they actually wanted. So in this video, I want to break down why some Airbnb hosts are switching to midterm rentals, what's driving that shift, what people misunderstand about both strategy, and how investors should think about this decision strategically instead of emotionally. First, let's talk about the burnout side because I think this is the part a lot of people experience but don't say out loud. Short-term rentals can feel nonstop, especially if you're self-managing. You're constantly checking your phone, guest questions, cleaning issues, maintenance problems, last-minute bookings, pricing adjustments, review concerns, and vendor coordination. And at first, a lot of investors don't mind that because it feels exciting. The property is producing income. Bookings are coming in. There's momentum. But over time, some people realize they built something that requires way more than they expected. And honestly, I think social media contributed to this problem because short-term rentals were often marketed as simple passive income. But operationally, they're much closer to running a hospitality business. That's the reality. And not everybody wants to run a hospitality business long term. That's where midterm rentals start becoming attractive for some investors because the operational model is usually calmer. Instead of constant turnovers every few days, you may have guests staying for 1 month, 2 months, or even longer. That means fewer cleanings, less messaging, lower turnover stress, more predictable occupancy, less day-to-day management intensity. For a lot of investors, that feels significantly more sustainable, especially people who already have careers, family, businesses, or multiple properties. Now, does that mean midterm rentals are automatically better? No. And this is where I think people oversimplify the conversation online because every strategy has trade-offs. Short-term rentals usually have a higher upside potential, especially in strong tourism markets like parts of Scottsdale. If the property is designed well, professionally managed, and optimized correctly, short-term rentals can absolutely outperform midterm rentals financially. But that upside usually comes with more volatility and more operational complexity. Midterm rentals often provide more consistency, but sometimes lower peak revenue potential. So the real question isn't which strategy is best. It's which strategy aligns with your goals, your personality, and your tolerance for operational intensity. That's the conversations investors really should be having. And honestly, I think some investors switch to midterm rentals for the wrong reasons. Sometimes people assume midterm rentals are automatically easy money, and they're not. You still need good furnishing, good marketing, good systems, good communication, strong tenant screening, and reliable operations. A poorly managed midterm rental can absolutely underperform too. So switching strategies alone doesn't magically solve operational problems. Execution still matters. That's true in every furnished rental model. Another thing people need to understand is that some properties simply fit one strategy better than another. This is huge. A property in a tourism-heavy area may still perform best as a short-term rental. Meanwhile, another property near hospital, business centers, or corporate demand drivers may naturally fit the midterm rental model much better. That's why I always tell investors, don't force a strategy onto a property because of trends online. Look at the actual demand around the property. Look at who the ideal guest would be. Look at seasonality. Look at operational realities. And honestly, look at your own lifestyle too, because I think a lot of investors ignore that part. Some people genuinely enjoy the fast-moving nature of Airbnb. They like hospitality. They like optimization. They enjoy maximizing revenue. They're comfortable managing moving parts. Other people hate it, and there's nothing wrong with that. Not every investor wants to answer guest messages late at night or coordinate emergency cleanings on weekends. Sometimes people realize they'd rather make slightly less money with significantly less stress. That's a completely valid decision. And honestly, I think more investors are prioritizing peace of mind now than they were a few years ago, especially after experiencing the realities of self managing. Another thing driving this shift is market maturity. A few years ago, a lot of average Airbnb properties still performed very well because competition was lower. That has changed. Guests have more options now. Expectations are higher, operations matter more, and some investors simply don't want to compete at that level long term. That's part of why midterm rentals feel attractive to some owners right now. Not necessarily because short term rentals are failing, but because investors are reevaluating how much operational intensity they want in their lives. Now, personally, I don't think this is an either or conversation. I think the best investors stay flexible. Some properties work best as short-term rentals, some work best as midterm rentals, and honestly, some properties work best with hybrid strategies depending on seasonality and demand trends. That adaptability matters a lot right now because markets evolve, and the investors who usually survive long-term are the ones willing to adapt instead of getting emotionally attached to one strategy forever. At the end of the day, the goal isn't just maximizing revenue. The goal is building an investment business that actually fits your life and your long-term goals. That's what matters. And honestly, I think a lot of people are realizing that now. They don't just want higher income, they want freedom, predictability, scalability, less stress, better systems. That's why these conversations around midterm rentals have become so much more common. So if you're currently own a furnished rental and you're trying to figure out whether you should stay with short-term rentals, pivot toward midterm rentals, explore hybrid model, or hands-off management completely, I put together a short intake form below. It takes about 2 minutes. That helps me understand your goals, your property, your current challenges, and what you're trying to build before we schedule anything. Then, if it looks like we're a good fit, I personally reach out and we can map out a strategy together. Because in today's market especially, success usually comes down to choosing the strategy that fits both the property and the investor operating it.